The question you can see in front of you is the worst ever answer question in the sample questions that the SRA have released in relation to FLK1. For full reasons, stay tuned, but only after the jingle.
If you wanna be solicitors, why don't you come and visit us at SQE1?
So this is the lowest scoring FLK1 sample question that has been sat by candidates that the SRA have released in their batch of sample questions. Only 29% of candidates answered it correctly. Now we're going to explore why that might be the case, and I think you can probably work out just by us showing the question. Have a look at it just as an overview. Don't read any of the words, but just look at it as an overview, and immediately your eyes are drawn to the numbers in the 5 options. And then you read the question: what's the woman's liability for income tax in the 24-25 tax year? And I think that a lot of students go into panic mode because it's a tax or a maths calculation, but it doesn't have to be that way, because I think these types of questions are actually quite straightforward if you can get your head around how to do a simple income tax calculation. I'm going to show how you get to the right answer right now.
SQE
So having established from a quick glance at this question that you're going to need a calculator, get your calculator out now. And you may want to pause the video right here, right now, in order to have a go at the question yourself, in which case give yourself the average time it takes to answer an MCQ in an SQE1 exam. That's 1 minute 42 seconds, and see how you get on, and then continue with the video. But for now, I'm going to move on and go through the question and comment on it line by line. So, a woman owned a pet shop which she ran as a sole trader. She decided to sell the pet shop and become a partner in a dog grooming salon which has been operating for a number of years. So I'm thinking, okay, she was a sole trader and now she's gone into partnership in a different business. And we got more information here. When the woman joined the partnership, she took out a loan of £10,000 at an annual interest rate of 10% to purchase her partnership share. So this is the second business, not the one where she was the sole trader. The loan is still outstanding in full, so the full £10,000 is still owed. In the 24-25 tax year, the woman's share of partnership profits was £38,000. And this is going to be an important figure because we know from reading the question already that we're going to have to be working out her tax liability, and we'll start off with her share of partnership profits. So it took longer than the woman anticipated to find a buyer for the pet shop. She completed the sale on 6th April 2024, making a profit on the sale of £10,000. And I'm thinking, oh, a profit on the sale of the business from when she was a sole trader. That profit isn't subject to income tax, that's subject to capital gains tax. So I'm just making a mental note there, and I think this is where some people who tried the calculation got confused because they brought the £10,000 into their calculation. So that's a bit of a red herring, and sometimes the SRA will throw in some facts to throw you off the scent because they've got to obviously have some way to justify some of the incorrect answers. So if you use that £10,000 in your calculation, you're going to get the wrong answer. And the final line of the question says, in 24-25, the personal allowance is £12,570. Remember, that's the amount of income that you earn before you start paying tax. And the basic rate of income tax is 20%. The basic rate tax band is 0 to £37,700. So if you're in that tax band, you will just be what we call a basic rate taxpayer, albeit that the first £12,570 is tax-free. So what's the calculation? Because we're asked to calculate her liability for income tax in the 24-25 tax year. Well, we need to find out what her taxable income was. What's the amount that we're going to charge 20% on the rate of income tax? Well, it won't be the full amount of that £38,000 because remember, we can deduct the personal allowance, that's £12,570, and we can also deduct the amount of interest that she paid on the loan to purchase her share of the partnership, because that is deductible from an income tax perspective. So the calculation for the taxable income should be the full amount of the partnership profits, £38,000, less the personal allowance of £12,570, less the £1,000 interest, because that's 10% of the £10,000 she borrowed. And then we can see that figure and we know immediately that falls within the basic rate tax band. It's less than £37,700, as you can see. And then we simply multiply that by 20% or times by 0.2. And we put that in the calculator. That's 20% of £24,430. and we get to £4,886, and that's option A, and that's how we get to that answer. Just before we go through each of the incorrect options showing the calculation you would have done to get to those figures and why that calculation is wrong, let me please ask you, please do like and subscribe to the channel, tap that notification bell. If you do, you'll find out as soon as our new videos drop, and it'll mean that we push up that algorithm, and it means that the videos that we have that are free to everybody get to as many people as possible to help them on their SQE journey, as well as yourself. In the meantime, back to the video. So what we're going to do in the course of the next minute or two is to go through each of the incorrect answers to explain how you got those numbers that were incorrect and compare it to the calculation on the left hand side of the screen, which you can now see, which is the correct calculation. So for option B, what did you do wrong if you chose that answer? Well, what you didn't do was to deduct the interest of £1,000, otherwise the calculation was correct. So what you did was 38,000 minus £12,570 for the personal allowance. You just forgot to deduct the interest. Option C was a pretty bad one to choose, I'm afraid, because there were two errors in the calculation there. To get that answer, you would have had to have added the £10,000 profit on the sale of the pet shop, which we mentioned earlier is subject to capital gains tax, not income tax, so that was incorrect to add £10,000. It doesn't form part of the taxable income. And secondly, you didn't deduct the interest, so a bit like the person who chose option B, you didn't deduct that £1,000 worth of interest. So two mistakes there. For anyone who chose option D, you got that wrong, because what you did, a bit like the person who chose option C, what you've done is to add to the taxable income the £10,000 profit on the sale of the pet shop business, which we said is a capital gain and will not form part of the taxable income of the woman on these facts. So therefore, what you've done wrong there, you can see you've added £10,000 to the £38,000 partnership profits. You did though deduct the interest correctly, but of course you've got the wrong answer because you've inflated the income incorrectly. And finally, option E. If you chose that one, the mistake you made was to add the interest of £1,000 to the taxable income rather than taking it away from the taxable income. Because remember, the interest that's accrued on borrowings or a loan to invest in the business that you're generating income from, you can offset the interest against your tax liability for that year. And therefore, it should have been deducted rather than added. But hey, you make those mistakes, hopefully in practice, not in the real thing.
SQE TV.
There are a few tricky hurdles there for candidates to trip over, and indeed with 29% of candidates actually passing this question when it was set on the SQE, you can see that it wasn't particularly very popular. But I genuinely think that if you can get your head around the basic principles of income tax, it's actually quite an easy question. It doesn't require huge amounts of maths, it just requires you to remember a formula. Anyway, good luck. If you're liking these videos, please do like and subscribe to the channel, and we'll see you again next time. Until then, cue the jingle.
If you wanna be solicitors, why don't you come and